make us feel like underdressed.
That's what I gotta do. The rest of his apartment. You should see the rest of his apartment.
Yeah, no, you should. Like the only part you'd want to look at. Hopefully one of my roommates doesn't come running in.
We'll see.
We have more guests coming in, so feel free to, it's on live now, so feel free to start anytime when you feel comfortable.
Oh, it's live right now?
Yeah, I think we just put on live. We're broadcasting on Facebook, and also, are we on YouTube as well?
All right. Well, ladies and gentlemen, thanks so much for joining us. We have a jam-packed panel on crypto derivatives. I'm Frank Chaparro, Director of News at The Block. I guess we can sort of kick things off. I know we're still waiting on some folks to join us for this conversation. But let's sort of go through some introductions. We'll kick things off with Josh Lim at Genesis.
Hey guys, can you hear me?
Yes, we can.
Awesome. Yeah, it's great to be on this panel with some of the other sort of market participants that I know quite well, and Frank, of course. I work at Genesis Trading. I'm the head of derivatives here. Genesis is a broker dealer based in the U.S. We've been in the crypto space since 2013, and we're kind of known for a couple things, including sort of being the authorized participant for the Grayscale Trust products. As well as having one of the largest lending businesses in crypto under Genesis Capital. So yeah, I think we sort of grew our derivatives business on the back of those two things, and it's been kind of a whirlwind since I joined the firm in June of this year. So not that long ago, but we do a lot of things sort of on bit.com, on Paradigm, as block trades on the listed venues, and we also do quite a bit of business OTC kind of bilaterally with our major sort of institutional counterparties.
Great thing about this panel is we are bringing in voices and market participants from both the East and West. So Josh will be able to share some of his perspectives as a trading firm in the United States. We'll kick things over to Daniel Yan at bit.com. They recently just got up and running and are building out their derivatives platform. Daniel, are you on?
Yes, absolutely. Thank you, Frank.
Yes, of course.
So my name is Daniel. I'm the CEO of bit.com and Matrix4. So we are I'll focus on the bit.com part. So we are a new exchange launched in August this year, focused on the derivatives, especially options. Currently we're ranking the second on all kinds of league tables on the BTC options. It's a pleasure to meet everybody. For all the participants here, we are pretty close friends, I think. We've been talking to each other for a long while, and I'm really excited to be discussing about topics today. Thank you.
Mm-hmm. Thanks, Tam. And then, of course, one of the in addition to bit.com, we have responsible for this event. So we'll introduce Anand Gomes, CEO of Paradigm.
Hey Frank, thank you. Thank you everybody for actually making the panel. I appreciate it. My name is Anand Gomes. I am the co-founder and CEO of Paradigm. Paradigm is a platform for the automated trading of block trades. We are a big participant on Deribit and also bit.com, and soon by the end of the year, we should be expanding to a bunch of other venues, including futures. Our flagship product is the RFQ product, which most people on this call already know. We've been live for about a year ago. Do you guys have an echo, or is this just me?
A little bit, yeah.
Yeah. Let me just, what about now? Is that better?
Try to maybe mute yourself when you're not speaking. That could help.
Yep. Yeah, that's it. Thank you. Frank, I'm good. Yeah.
Is that all you got, Mr. Gomez? All right. Well,
Short and sweet.
all right, onwards we go. Akshai Rajendran at Pattern Research.
Yeah, hey, thanks, Frank. Yeah, I'm Akshay Rajendran, head of trading here at Pattern Research. We're a crypto quant fund. We specialize primarily in liquidity provision of crypto derivatives. So yeah, we work quite closely with bit.com, providing liquidity in the options there. And, you know, have been working closely with Paradigm for quite a while as well, trading with them on a number of venues. So yeah, thanks for having me. Excited.
Absolutely. Thanks for joining us. And Shiliang Tang at Ledgerprime.
Yeah, thanks, Frank, and thanks everyone. Yeah, similar to Akshay, we're a quantitative crypto hedge fund, been around since 2017. Do most of our trading kind of electronic market making. So a lot of the quotes that you guys see on the screens, that's us. Do a lot of trading on Derivatives, but obviously a ton on bit.com as well, and do a fair amount of block trading through Paradigm and OTC as well. So it's good to be here.
Great. Well, let's dive into it. Thanks for those introductions. It has been a interesting past couple of days, I think would be an understatement to say, in the political realm, but also as it pertains to markets. It's been fascinating to see most of the traditional markets kind of move somewhat modestly. We're seeing low volumes and investors basically, you know, sitting on their hands to an extent as they wait for more certainty around this election here in the U.S. One thing I've been curious about is how this broader political macro environment has been creeping into crypto trading and crypto derivatives more broadly. So I think we can start there at a high level to sort of tie this pedantic, crazy world to the real world, and then maybe touch on some deeper trends that we're seeing in the industry. But let's start there with this election and how it's maybe impacting crypto derivatives. We're seeing action continue to heat up across crypto broadly, with the price running up to 15,000. But how is it impacting? How is the election impacting derivatives trading? We can start with Josh.
Yeah. So I think much like other asset classes, I think a lot of our counterparties, especially kind of the institutional asset managers, kind of took most of last week just to kind of reposition their books and sort of decide how much delta in crypto in particular to carry into the election. And I think that was kind of expressed in a lot of ways, right? And it is maybe a little bit confounded too with the fact that like October was a big expiration, the last Friday in October. So yeah, we had a lot of action basically on the CME expiration. That was like basically 11 to 12 a.m. or 11 to noon on Friday, and a lot of people either sort of basically swapping to the benchmark, or sort of like closing out basis trades, or sort of rolling positions out. I think there was a lot of focus on that. And I think a lot of the action that we see in crypto these days, at least, is sort of mirrored by what people are doing in other asset classes, and maybe that's a function of also just like the counterparties that we talk to. But certainly, I think we saw a little bit sort of more caution in crypto, and I think part of it was sort of a reflection of the caution just broadly across like the tech space in general, like equities. I know people sort of were positioning their portfolios a little bit more defensively, maybe like, selling growth, selling tech, and sort of buying like industrials and other things that would benefit from like a blue wave type election. And obviously now post-election, like you see a lot of those kind of growthy names that come back. And I think crypto is a big part of that too. I think people are sort of reallocating back into it as there's more certainty about election outcomes. So that's sort of like what we're seeing here. And then the other notable trend I would say is like we saw quite a bit of sort of bullish action in the calling, like on Bitcoin. I think part of that is like replacement of deltas into kind of, what maybe was a little bit underpriced vol on the upside, and you can kind of see it now with some of these like really dramatic moves above 14K.
You mentioned in a note yesterday that you sent over to me, I was bothering you about market dynamics as I often do, that volumes right now are relatively two-way, pivoting around this 14K level. You said that once we have more clarity around the election, you'll expect some real money buying, and it sounds like buying that is an extension of this broader trend we've been seeing of firms trying to allocate a portion of their balance sheet to Bitcoin as part of a treasury reserve strategy.
Yeah, I think that's right. Like I think people were sort of a little bit on pause, like waiting for the catalyst to go through and having already kind of positioned the way they wanted to going into it. And I think now, like especially kind of this morning, like we've seen some larger tickets come in on the buy side. I think both across like Bitcoin and ETH, especially with some of the kind of the catalysts playing out with ETH2 yesterday, and more focus on that part of the market. So I think definitely now that there's more clarity, like people are starting to kind of use their dry powder.
I want to get the perspective of this from an Asian platform. Dan, is this sort of activity or is the sort of dynamics that Josh are describing holding true outside of the US?
I think you're on mute,
I
Dan.
think you mute yourself then.
Sorry, can you hear me now? Hi. So basically, I agree with what Josh was saying, but I have to say that most of the call buyings, I feel like the flow has been coming from the West. It has really been coming from the West since the past 3 to 4 months, no matter from the delta buyers or from the call buyers. In Asia, I think there's a very interesting thing that a few people have been posting on Twitter, that is the amount of BTC that stays in the HBO, the top 3 Chinese exchanges, has been declining steadily and substantially. So that's basically telling people that people has been buying coins and putting into cold wallet and basically reducing the real active supplies, which has been, I think, one factor driving the bullish move on this BTC higher. In addition to the obvious fact that the risk of pre-election has been a little bit overdue. So now once the election kind of is out of the way, so everybody's buying risk, including BTC.
Interesting. So how do you sort of adjust for these quickly changing dynamics as a platform?
As a platform. Oh, okay. First of all, I think whenever market is very volatile, it's very good for a trading venue because volumes tends to go higher, open interest tends to go higher, so that's a good thing. But I think what we are seeing in the past 2 months, it's we have seen new players coming into the field, trading huge amount of options, which is new to the market. So that means I think the market is turning very professional, and whoever can provide more professional service to help customers source liquidity, to help market makers to provide liquidity safely, all of those very professional functionalities and protections will be very important for a platform for it to continue to attract more volumes onto the platform.
Seems like we're reaching an inflection point. You talk about the professional nature of the crypto derivatives market. We're seeing activity on platforms like CME really ramp up. Their large open interest holders have surged to over 100, as we reported yesterday, and sort of volumes going into the election, were increasing. On the sort of evening of the election, they were up 75% relative to the average. So we're seeing institutional adoption of these products. Anand, I want to flip this over to you. Is the crypto derivatives market, more so than ever, it's probably an obvious answer, being driven by institutions versus retail punters?
Yeah, I mean, no question about it. I think you can see it in a bunch of, well, Dan obviously talked about it, but our flow. I mean, we started out as an institutional platform, right? Our workflows are very basically we cater to institutional clients. It's large size trades, multi-leg trades, and private execution, right? Because you don't want disruption with the order book. So that tends to be very friendly to institutions, but that was and so we started out that way. But in the beginning,
That's it.
we but in the beginning we saw a lot of sort of flow from high net worth individuals, or what you would like to call whales, right? And that has completely changed. Like, I would say probably about over 90% of our flow is now institutional focused. We have close to 270 institutional clients, 250 odd institutional clients now, and most of them, if you sort of survey them or just look at their backgrounds, tends to be people from traditional finance backgrounds, or somebody who's sort of been there, done that, obviously sees the opportunity in Bitcoin vol, and now thinks that, hey, this is a great asset class and space to be in generally. And so yeah, I mean, it's and of course, the opportunity is one thing, but also the general narrative around Bitcoin. It's sort of hard not to be bullish Bitcoin right now, right? You have the store of value asset thesis playing out really well. You have the treasury asset, playing out extremely well. And so I think all of the timing, I think, is just sort of perfect, and that's why you're seeing such an uptake in adoption across institutional players.
And it's kind of this reinforcing phenomenon, right? Where the one big impediment for so many investors was the lack of, or rather the presence, the omnipresent volatility that existed for this asset class. But as you have more and more derivatives products come online, more folks trade those products, it kind of dampens the volatility, which then opens the door for even more investors to come in.
Yeah, definitely. And then, I should do a better job of plugging our own platform here, but I can't say enough about the fact that tools and institutional tools that are made available now that allow institutions to get the liquidity, right? Because institutions aren't trading 25 BTC, 50 BTC at a time. They're trading much larger sizes, and now you have an influx of more market makers. You have tools such as Paradigm that are providing access to this liquidity on demand in size, with the complex workflows such as multi-leg trades and things like that, which obviously makes things a lot easier for traders, and therefore that also adds to the adoption uptake.
Mm-hmm. We've also been seeing more players enter the fold. Bit.com is one example, and just shifting centers of power, if you will, on the future side, at least, right? With, BitMEX to an extent falling from grace, and more players trying to just compete for this larger pie across options and derivatives. Shiliang, when you think about the center of liquidity in this market, where is it, and where has it shifted, and maybe where is it going?
Yeah, I mean, I think, especially this year, in the middle of this year, I think there was a dramatic paradigm shift, right? With just, especially when Paul Tudor Jones came out and said that, he's getting exposure, to Bitcoin. I think we all know that he's doing it through CME futures. And then we now have, Stone Ridge's arm, NYDIG, that's getting into space and being a large player and doing it on the CME. I think that there really has been a large paradigm shift in terms of just liquidity flowing to and from the CME versus kind of before, which predominantly mostly from kind of the Asian exchanges. And I think what's notable is that really it still only has been just a couple of large tickets that have come in and have kind of dominated on the CME, right? It's not like there's 100 institutions, and that's why the CME volume has kind of picked up. I think it's notable that the fact that there only has been a very small handful of institutions that have gotten in, and it's contributed to this large growth of just CME volumes, right? So I think that that's been a real kind of game changer. And I would just note that the other participants kind of talked about it a little bit, but what's really notable, it's just we're sitting at a haircut under 15K here. We haven't been here since 2017, and just the fact that like we're not seeing realize, or even implied vol is really going crazy. We're not seeing like the basis really blow out. We're not seeing like spreads completely widening out. I think that's kind of just really great to see that we're actually in a market that's very mature, that has a ton of liquidity, that's able to provide liquidity for all the participants. Despite a market that's sky high here, and I think a lot of as Dan mentioned, a lot of the Asian flow has been mostly supplying the liquidity from the sell side, from the structured products, and that's been a nice counterbalance to the Western flow, which has been more buyers. And so we're really seeing a two-sided market that's extremely mature compared to what 2017 was.
And you're seeing more reliability on the platform side, right? We're kind of been creeping up to 15K, but folks aren't getting locked out of their accounts, and we're not having day-long outages. Someone on Twitter referenced this, or referred to this rather, as probably the most quiet rally we've seen in crypto, and a lot of that maybe has to do with the fact that vol's not kind of going gangbusters as we march forward higher. Akshay, what do you think is behind the sort of quiet nature of this run-up, and to what degree do you think the fact that we have all these new tools, is that playing a role as well?
Yeah, I think it's a great point. And as Shiliang mentioned, I mean, it really speaks to the maturity of the market now. In 2017, this same move, vols were in the hundreds, like maybe 120 or something like that, right? And the fact that, I mean, prior to this rally, we were probably trading in our kind of consistent lows around 30, 40, and vols uptick to about 55, 60, but they're managing to stay pretty muted within that range. I mean, I think it really is just the fact that we have a lot more institutions in the market. We have a lot more people with deep pockets in the market that are interested in providing liquidity and putting on trades. And yeah, I mean, and also just beyond that, I think the loss of BitMEX and the loss of liquidations has actually really contributed to the kind of dampening of this price action, which you can see as a maturing of the market. And the platforms that we're trading on have stayed up. I mean, there have not been any notable tech issues to speak of, I think, between any of the major platforms on this move. So yeah, I think it's all around just like kind of points to a growing and maturing market.
That's interesting, the comment you made about BitMEX. Do you think that because you don't have the conduit of BitMEX to get wrecked constantly and consistently, that maybe some of that sell side view isn't being as communicated or as expressed in the market?
Yeah, for sure. I mean, I think like a feature of BitMEX on many of these moves, both to the upside and downside, are these kind of cascading liquidations that take us like many levels lower or higher very quickly. And the fact that we're not really seeing that anymore, which I think speaks to just this withdrawal of liquidity from BitMEX, has contributed to a much damper and muted move.
We might as well, just because I find it interesting and I'm kind of in control here, I guess, maybe focus in a little bit about BitMEX. We were having this conversation in 2017. We'd probably be talking about how much some of the participants, would be green with envy about their position and want to crack a little bit into their liquidity and market share. And, here we are in 2020, that might not be the case. Or maybe some of you might want to be in their position if you like the drama of it. But with BitMEX out, what is this a net positive for the market? We shook this off, but where are traders going? I hear about one trading firm in particular, a large Chicago shop that was one of the biggest market makers on BitMEX. They're now currently onboarding on FTX. So when you have like a sort of behemoth kind of fall out and folks need to look for other places to go, where do they go? Where are they going right now?
Is that for me?
Bit.com.
Yeah, bit.com, exactly.
Yeah.
Yeah.
I'm not getting paid to say that, I promise. No, I mean, I think bit.com for sure is a beneficiary, right? Like, I think, Deribit too, to some extent. I think we're seeing a lot more interest in like CME, but like CME is just not accessible to everyone in the world, right? It's hard to get an account. Like there are gatekeepers, like the kind of FCMs that you need to onboard with to get access to CME. So it's a much more limited audience, but there is more volume there, as everyone can see. So there, it's clear that some volume, institutional volume is going there. And I think like FTX, has like really good product market fit, right? Like they have this sort of like everything dollar denominated, like dollar collateral. And, I think their biggest advantage is that they're not subject to like Chinese government crackdown right now, right? So yeah, I think like some of that volume is going there. And we're certainly seeing like more people kind of talk about them as a place to sort of meet and do trades.
How important is a sort of diversity of products? Because that's something that really, if you look at BitMEX, was something they were never really concerned about, but they still, up until the March blowout, maintained a respectable position with market share, as it pertains to like market share, probably. But is that important for other venues, do you think, Anand, to have like a diversity of products?
Yeah, I mean, I think a better question for the traders here, right? Because they actively spend their time evaluating, where is where do they get most bang for the buck? I definitely think the variety of products helps. But I tend to think also that it's just doing the simple stuff right, the type of USD, accepting USDT as collateral, things like that, just making it sort of easy for people to onboard. I think one of the big, Josh mentioned this, but one of the reasons why the CME continues to stay sort of off limits for people is just that it's the gatekeepers and the FCMs, and the onboarding process is pretty terrible. But also there's no way for you to get credit for any crypto collateral that you have, right? And of course most of the guys in crypto, they tend to keep the money in crypto, whether it's stablecoin or Bitcoin, right, and things like that. But I turn this back over to Shiliang and Josh and Akshay. Is like, what do you think are like sort of the top three things that you look for, when you look to sort of move money to an exchange to start trading? Would actually love to know.
We'll kick things over to Shiliang. What do you look for?
Yeah, I mean, that's a good question. I think, at the end of the day, as kind of market makers like Akshay and Josh, we look for opportunity, right? And so, who are the other participants on the platform? Like, we don't want to jump on a platform where there's only, HFT hedge funds or kind of sharks that are kind of trading, or other market makers, and we're just banging into each other. I think really, are there platforms where, that there's more, let's say, retail, or more participants that aren't, let's say, vol traders or traders that are expressing numerous different viewpoints. And so as market makers, we get kind of a nice balanced flow. And, we can provide, liquidity to these participants, and at the same time get paid to do so, right? And I think, bit.com, that's part of the reason why all of us, I think, wanted to get on bit.com when it launched initially, is just because it was this flow, from predominantly from Asia that maybe, us sitting the West weren't necessarily touching as much. And so kind of having access to that directly, it was kind of a nice counterbalance perhaps to, some of the flow that we were seeing. And so, yeah, I mean, that's, I think a lot of the reason, in terms of what we first look at in terms of, an exchange. And products are important, but, at the end of the day, you want liquidity to get concentrated. You don't want like a 1,000 different products and to have like a few trades per day on each product. I think it's much better to have a platform where you have like 3 products and a ton of liquidity as opposed to like 1,000 products and like no liquidity, right? And so that's kind of the things that we look at.
Well, we can maybe ask Dan how he thinks about attracting folks like you to his venue. We've seen options market share for bit.com grow since launch to right around 5%. We'll say 5%. It's 4.7%, but since they're hosting us, we'll say 5% of options market share. Building up the market slowly but surely. How do you go about doing that? How do you bootstrap liquidity and get a market up and running?
Hey, thank you, Frank. First of all, thanks to everyone that has said very good things about bit.com in the past 5 minutes. I appreciate that. And to correct one thing, we're 10% of market share, Frank. Okay, now we're back to topics. So, sorry. So I think what Shiliang said is very important. I kind of echo that. That is, it's very important to basically you service your makers and you service your takers. As simple as that. It's like running a Alibaba or Amazon. So you service your makers by providing healthy two-way, multiple different types of flows so that it's healthy, and you provide your takers with good liquidity. It's really as simple as that. And in terms of product, I do think it's important to have more product than less product, as long as each product you know where your takers and makers are, and basically you service your customers by telling them they can earn money and they can feel easier to trade and easier to make money at this platform. So that's my take.
Mm-hmm. Does that resonate with the traders, Josh?
Yeah, for sure, right? Like I think the idea that for us, it's like what's most important, I think, is just being able to interface with as wide a pool of a network of other trading counterparties as we can. So, to that point, I think bit.com has done a really good job of sort of like bootstrapping that network very early on and getting a lot of very key market participants on the exchange so that we can exchange risk, right? I think there's like a pretty small community of us. I think a lot of us are basically on this call right now. But basically, there's a small group of people that can recycle risk and kind of, warehouse risk and have a balance sheet to do that. And, it's very important that we all talk to each other all the time and find venues that we can kind of cross that risk with each other, because we're all trying to, service like a diverse set of clients. I think we all have different sets of flow. So just being able to meet on Bit is an important thing for us.
Mm-hmm. What do you think? Let's kind of take a step back at a high level and think about, some of the impediments that maybe exist still in the derivatives market. We've obviously seen breakneck growth, and there are a lot of things that we can be thankful for to an extent, but what is still missing? We're seeing institutional flows build up. We're seeing a bit more reliability on the platform side. We're seeing more diverse liquidity, but surely there are things that are missing from the perspective of traders. And I'd be interested to have it maybe juxtaposed with the experience one has in a traditional market. Maybe Akshai can take that one.
Yeah, sure. I mean, I think one thing that we're seeing with the proliferation of exchanges is just that we now have risk and capital deployed at many different venues, right? And obviously no offset for that, no relief, right? And so our margin just kind of grows like additively as we add exchanges. And, with new exchanges come new opportunities, but also come new risks, new we're stretching our capital thinner. And I think in the traditional markets, it's much more consolidated. You have a few venues where everybody does everything. And so you don't have the same, you're not trading on so many venues. Yeah, exactly. And of course, with like clearing firms, you have often like risk netting and cross collateralization. So I think, from my perspective, that's one thing that we still haven't quite seen yet. And there are some solutions out there that people are working on to solve this, but from the perspective of like trading on large, listed exchanges in crypto, there is no offset, right, across them.
Yeah, just to add to that, I think, I would say there's two things broadly in my mind. I think one is the lack of capital efficiency, mainly on the derivative exchanges, because most of the liquidity is on the derivative exchanges. There's people building prime brokerage solutions here in the West and for spot, but that I tend to think that's that's still not as effective as let's say if you have prime brokerage for all the derivatives exchanges. There's companies such as XMargin who I think is pretty promising in the space that are really trying to build solutions, like Akshay said. But I think that continues to be a big impediment for people. You couple that with the fact that yes, there are a lot of institutional new participants in this space, but I think the total assets under management when they come into the space is like not a lot, right? And so like they really need to they get stretched thin, I guess, when they're trying to deploy capital across multiple exchanges, right? So I think that is one thing that definitely needs to be better, or there just somebody needs to solve that very quickly. And then the second thing, I think, from a platform perspective, I think, for us, the lack of sort of regulatory uncertainty, or the lack of regulatory certainty rather, is a bit challenging because, every time you do something, you have to worry, you have basically 3 lawyers that you have to talk to, to ensure that, you're not running afoul of any, well, first of all, there are no rules, right? There is no clear-cut sort of charter rules that we can sort of go to say, hey, is this okay or is this not okay? And yeah, the regulators are doing, they're definitely catching up, but I still continue to think that it's a huge sort of even for traditional finance guys to sort of to be all in on this space. There's a lot that needs to be figured out, and I think
Sounds like you're just tired of paying lawyers so much money.
Dude, it's the worst. It's like it's a huge, I mean, yeah, and it's not cheap, man. I mean, all of us on this call, know how expensive it is. Before you do anything, you just have got to pay the lawyers.
Got to pay the lawyers. Got to check with the lawyers before you talk to Frank. Are there any lawyers on this call? Probably. Probably. It's interesting. I mean, we can maybe get into the regulatory legal hangups, but you're bringing up some fairly interesting points about what makes this market difficult to be in. One thing that you mentioned, and it's kind of been the buzzword du jour, or at least of this year, right, is prime brokerage, and many of those providers coming online are crypto firms looking to enter into that market. But I feel like it's all frou-frou, right? Or sort of a bunch of wannabes. Josh, you cover your ears. I'm sure you guys are doing great work on the PB side, but I want to get some sense from the traders because it's a question I've been thinking about. Do any of you guys see these offerings out there, these PB offerings, or wannabe PB offerings, and think that's something that you would even need? We can go to Shiliang.
Muted, Shiliang.
Yeah, I mean, I think it depends on the participant, right? I think for us, we predominantly focus on derivatives, right? So futures, perps and options, and so I think the PB space, as it currently is in crypto, or quote unquote PB, just hasn't cotton up to there, right? So, as Anand mentioned earlier, I think a lot of it is just focused on the spot markets, and that's fine because that's a lower hanging fruit, and it's easier from a technological perspective to kind of get off the ground, and it fits nicely with kind of the custody solutions and trading solutions out there. But, ultimately for us, right, I think we're not even close in terms of the derivative side. And as Akshay mentioned, it's just it's difficult for us to kind of deploy capital on these derivatives platforms everywhere because at the end of the day, unlike spot, it's not fungible, across different platforms. And so, yeah, I would say for us, the PB space just isn't there yet in crypto in terms of what we aspire to see and eventually we'll want to use.
Josh, how do you get all of this intertwined? How do you get it so that you have derivatives, you have spot, you have your custody all under one roof for your counterparties to engage with you?
Yeah, I think like when we talk about PB, like it really comes down to like two things, right? So basically in traditional markets, it's like, you're an asset manager, you're a hedge fund, you want a prime broker that can give you financing, right? Like help you sort of manage your capital and your balance sheet and stuff like that, and give you access to sort of buying power across a lot of different venues, across OTC trades that you're trying to do, and that sort of access to markets. I think it's basically liquidity and financing. So I think, like if you look across the crypto landscape, like I think some firms are better at one of those aspects, liquidity, and those are sort of like the guys that came into crypto early and are plugged into all the different venues, both the regulated and under-regulated ones, and can trade across all those venues and have good APIs and are generally like quant market makers. And then there's guys that are like better at financing and balance sheet and have access to capital and, are trading with a lot of like very early market participants and can source funding in a very cheap way and stuff like that. And I think that's, it's a hard balance to have both of those. So I think, I hope that that's kind of like the competitive advantage at my firm at Genesis, right? Is that we have the network and connectivity and access to funding in crypto, which like, as we all know, like crypto funding world is very different than like, like traditional markets, like US dollar funding world, right? Like US dollar funding rates in crypto are like, like high single digits, low double digits, and whatever, like in US dollar front end of the yield curve is like close to zero, right? So it's very, very different, and there's a big gulf, and it's a lot of it is sort of being able to bridge that gap.
And then possibly help you execute on new different types of trading strategies if you're going to be interconnected with all these different markets, and also have spot and derivatives side by side, because there's a whole universe of trading opportunities that most folks can't really execute on at this moment.
Yeah, I think that's right too. Yeah, there's an access problem in crypto. I think the market is like very bifurcated between the sort of offshore, like unregulated venues versus the ones that are regulated, and the opportunity set is very different, and the kind of trader base of those venues are very different, and that's why you have arb opportunities that persist, right? So I think I think a lot of it is sort of providing that access to people, and giving them the right tool set and sort of the right access to different liquidity venues that they want to implement their strategies. And a lot of it will involve I think licensing, and just you have to kind of operate within a framework where you can provide agency trading capabilities to people as the trading strategies get more sophisticated, and that is like a very regulated area, especially in like the US market. Like you can't just provide agency trading to people. It's very easy for firms like like Jump and DRW and other firms like to say, well, we're just a prop trading firm, we're just providing, to the extent that we trade with people, it's just principal versus principal. So that's easy, like a lot of people make that argument, but being a service provider and being a fiduciary is a higher bar.
Definitely.
Frank, I want to echo a little bit on Josh. So I think it's very interesting to separate the PB term into two parts. One is financing, one is liquidity. I think on liquidity, basically accessing different venues and has netting effect in terms of collateral, which is what Akshay and Anand has talked about, has been difficult for obvious reasons. But on the financing part, it's actually been a very promising market. I mean, Genesis is the #1 in the world, and BlockFi is doing very well as well. On the matrix port side, we're kind of #1 in Asia. So there's basically financing for hedge funds, and also finding LPs and act as an LP on funds helps a lot of hedge funds and family office grow. Helps a lot of hedge funds grow, and also basically utilize the capital better. So I think this part of the PB business has proved to be very useful, and it will continue to be useful.
Yeah, I'll have a quick couple comments on that, right? So I think Dan actually put it extremely well, and that's sort of the premise, that sort of unbundling is the premise on which our company was sort of founded, right? You have the traditional term PB, but I think you could decompose that into two things. One is access to liquidity on multiple venues in one place, and then two is having all your capital in one place that you can deploy across multiple venues. I think the execution piece we can solve is because you sort of have, and now we're basically going live with our API, where you basically have one API connection and you can execute on all the venues that that we can offer, right? And we'll obviously be in the top 10 by, let's say, sometime middle of next year. So I don't think the execution is too much of an issue. The problem is having capital across all those different venues and basically getting that capital efficiency in one place. I think, like we're Dan, and to that on that point, people have bridged this gap because there's no sort of true PB on the capital side. People have sort of bridged this gap by borrowing from Genesis and Matrix Port and BlockFi and things like that. And I think, X Margin, for instance, is sort of working on a solution where, basically lenders can lend to this sort of whitelisted ecosystem of exchanges, which will therefore allow trading firms to get to basically get the effect of that borrow, and then in return for that, sort of provide visibility into how much risk they're taking to the lenders, right? So therefore lenders will be able to lend more, and trading firms will be able to borrow more, as long as sort of funds stay in that whitelisted ecosystem of exchanges. And I think that's probably the most promising I've seen so far in terms of getting close to true PB as possible, because I think true PB, having all your funds in one place and actually getting that netting effect across all the different exchanges, I don't think is actually possible, because mainly because of the regulatory challenges of having offshore, onshore, and just sort of as a PB company dealing with those geographical sort of jurisdictional restrictions across the different exchanges.
Couldn't you just not link up to those exchanges?
Yeah, but I mean, you could, but then that's where all the liquidity is.
What's the point?
Right. Yeah. So what's the point? Exactly.
You shelled X Margin like 3 times during this call.
I mean, it's yeah. So yeah, disclosure. I'm a small investor, but I also think,
That's what I do.
Yeah. Yeah. I mean, but I think it's the most. It's the most sort of promising I've seen so far in terms of bridging this gap. I don't think, like I said, you can bridge this gap with having a company that, provides this one-stop shop for capital across all the different venues. And so, bridging that gap through partnering with lenders to lend to an ecosystem of sort of exchange wallets, I think, is probably the best I've seen.
Definitely. I want to get back to price to round out the conversation, close out the conversation, but I want to ask about product first. What are like some of the sexy products that traders are interested in? Some of the more esoteric products, back when we had the halvening, everyone was talking about hash rate derivatives. What are some of the weird pedantic derivatives that people are hungry for, or is weird products not something that is on the radar right now?
This is Josh and Shiliang. You guys are up. you guys do the most creative things we've seen. So
Yeah, I mean, go ahead, Josh.
Yeah, I mean, I was gonna say like maybe two areas that I can think of. One is, you know, like we're seeing a lot more sort of like call buying and I'd say like the DeFi tokens, right? Like I think those are kind of considered exotic, right? Because there's no market, there's no observability on the vols and you know, limited observability on forwards. I think, yeah, a lot of people are just sort of trying to, you know, pick the bottom and sort of try to pick winners in the whole DeFi sector, which is obviously taking a beating. So we've seen a little bit of that, just people trying to take limited loss views on those assets. And obviously like there's a lot of sort of catalysts, right? Like the dev teams are still working on things, even though price
drive, I think, retail adoption. You know, especially the traditional world, I think like binary and digital options are extremely popular, and I can definitely see that really taking off in the crypto you know, world as well for kind of the retail punters. And like Josh said, we have seen kind of not that it's, you know, traded a lot, but we have seen demand and just pings in terms of pricing exotic options like, you know, double no touch digitals or barriers, and things that kind of play into this whole structured product and structured flow and yield enhancement narrative that we've seen. So we've definitely seen a lot more you know, creative ways to kind of express that. And at the end of the day, I think it would be pretty cool. You know, maybe eventually we have, you know, something like vol swaps or variance swaps or VIX-like products. You know, coming to the space, it's not something that maybe is necessarily, you know, maybe the market structure isn't necessarily there yet. You know, given that that's a derivative of a derivative, and so you need a derivatives market to be really liquid first. But you know, I think we're well on our way to getting those products in the near term.
What do you think you would need a VIX-like product for that you couldn't necessarily do with just like vanilla options?
I mean, you can recreate the VIX, the whole VIX curve or the product you can recreate with, you know, vanilla options, right? It's just a strip of options. And so to really do that, though, you need kind of a robust and extremely liquid, you know, options market for dealers to kind of hedge with. And I think we're close, but we're not necessarily there yet. You know, especially for a lot of in the money options and whatnot. But yeah, I mean, it's basically just a derivative of a derivative, right? And so similar to how, you know, to actually trade derivatives, you need a robust and liquid spot market to get these kind of derivative products like a VIX. You really need to have kind of a trustworthy and robust derivatives market. And I think even like a PB-like solution in the future will really help to mitigate that.
Awesome. How much time do I have with you guys? Does this go to 10 or 10:30?
As long as you want. Right.
What I mean, I can go for the.
Yeah.
Well, I have a lunch, but it's only 10 a.m. So we'll be okay.
Take your time. Yeah. And I think it will be after this sharing, I think there will be also very interesting Q&As because we have a lot of institutional players, traders online.
Yeah, that would be great. Are they interested in asking some questions? Can they drop them in the chat? Maybe.
Yeah, please feel free to drop in the chat.
Yeah, we got a bunch of people listening in. Look at this.
Yeah, we can need some questions into the following discussions. So feel free to drop your question in the chat.
Yeah, anyone who wants to take a spin at being moderator for a day, feel free. Message me directly. I really don't know how this works. How this there's chat. Can I like message people directly? Send them sweet nothings? Yes, I think
Hey, Dan, I have a question for you. So I
Yeah.
think, structured products, obviously, I think, a lot of people talk about structured products, right? And you guys are obviously the center of it. And, we obviously see a ton of flow from structured product providers. One thing we've seen, over the last, let's say 6 months, and, I think there's sort of there's two parts to this, right? There's the sort of retail apps like Power Trade that Shiliang just mentioned, that will have things such as multi-leg trades and so on and so forth. But Matrixport obviously has been one of the first people, if not the first, I think, who launched structured products. How have you seen, what has been sort of the evolution in that structured product space, right? Your dual currency product obviously is very successful. I know you've launched some DeFi products recently, but anything with sort of embedded optionality that you guys, are launching or have thought about?
Right. Well, it's a very good question. I think this is what happened. So in third quarter of 2019, we launched a dual currency product, which is basically covered call European options. And then with the competition in the markets, we start to see American barriers happening in the market. As Shiliang has mentioned, there's actually DNT, reverse knockout, reverse knock-in, all kinds of stuff actually, flushing the markets. Obviously, everybody has to use the vanilla option to hedge it, right? Because that's the only thing that has liquidity in a centralized exchanges. But those things are flourishing very well. And for us, I mean, in terms of products that we're coming up in our way, we are currently focused on the European options, but we are trying to basically use the European option and DeFi together to build some products which we're going to be launching soon. So basically, it's kind of you put your coins with a Matrixport, and basically we help you put into DeFi, and with the interest rate, we help you buy some optionalities so that you can basically either go with the market higher or go to market lower, etc. So on ourselves, basically, to answer your question, we're still focused on European because we really focus on liquidity. We think those are the products that has basically very little risk and you can scale up really fast. In terms of the American barriers, there are customers that on our platform who are using bit.com to hedge, and they're offering to their customers. I think it's higher risk, but probably higher return as well. So it's kind of a different approach. And I think the market will continue to flourish, as I know players in China, they are basically innovating even more exotic stuffs at the moment.
Yeah, I think just to sort of add to that, I think you mentioned a great point about bit.com and Deribit obviously being super liquid venues, which obviously people like Matrixport, like some of the other lenders we know, sort of use your order books and to sort of hedge their products. We're seeing a lot of demand for basically sort of non-Asian lenders from trying to offer products such as you guys, where if effectively on one side they have retail distribution or an institutional distribution, and they sort of want to offer like a some sort of yield enhancement, right? And obviously the natural thing to do is to sort of recreate something that exists in the market, and then obviously use bit.com or Deribit to hedge that risk, right? And so I think one of the products that we've launched as a result of this is sort of this idea, Shiliang and Josh know this, and Dan, you of course know this as well, is this idea of a dedicated price stream, right? Where instead of doing an RFQ model or an order book model. And as you know, if you're a lender or a structured products issuer, you want to sort of minimize pipeline risk, right? You're sitting in the middle. You have structured products being executed on one side, and then you're hedging that on the other using listed products, and you want to minimize uncertainty as much as possible, right? You don't want ever the case where you execute the structured product with the client on one side, and then lo and behold, the order book sort of all the liquidity sort of evaporates, right? And so one product we're offering people is this idea of a dedicated price stream. The market makers on this call are, will be a huge part of providing this liquidity. But the idea is pretty simple, right? You provide listed products, that people can use to hedge, but provide them in a manner in which they're sort of dependable. And then, these lenders and structured product issuers sort of use that to construct, the products such as dual currency and so on and so forth. And I think, and then of course, companies like PowerTrade, them as well, because them, I think they'll just be doing simple products, but doing, combinations and permutations of those to create, this idea of multi-legs complexity that I think right now there isn't a retail platform out there that has really tried to offer this as like a retail product. But yeah, and I think that's a promising new space, and we'll see sort of how that evolves over the next 6 months or so.
Yeah, agree.
Is there anything else happening? You mentioned PowerTrade. Are there any other platforms in the DeFi world that folks are finding interesting? There's Hedgic is another one. Is there something about what some of these players are doing that centralized players in the centralized derivative market could learn from or borrow or implement? Maybe a non.
Yeah, I mean, I definitely think there's a ton that people can learn from, right? I think, we're in the fortunate position of speaking to pretty much everybody in the space: market maker, taker, lender, whether you're a commercial hedger, whether you're a platform such as PowerTrade. I think one of the first things we tell people is like, hey, don't reinvent the wheel, right? There's a ton of stuff that centralized players and even traditional finance has sort of solved. You don't need to reinvent the wheel. And so I definitely think, and people are learning, crypto, at least in the beginning, maybe a couple of years ago, crypto sort of as a space seemed to be intent on recreating the problems from the old world and then sort of learning the hard way, right? And I think now you're seeing that change very, very quickly. There's companies like you said, Hedgic, Open, that's another platform that I think that has a lot of promise. I think one thing these platforms do really well is just the UX and how easy they make it in terms of getting access to liquidity and then just making it easy for people to consume the product. I think, in fact, the traditional finance world can actually learn from the DeFi world a lot. So yeah, I mean, there's a ton, and of course, but I think at the end of the day, the mechanisms of what make an option or what makes option liquidity infrastructure is really the same, right? You can cut it and slice and dice it any way you want, but at the end of the day, it's sort of the same. And so people tend to gravitate towards the same best practices. They might just call it something different.
Mm-hmm. The mechanisms are basically the same. So I guess one of the questions would be, what is the advantage of maybe moving on to a platform like PowerTrade? Is it more optionality? Is it something else? Shiliang, have you been playing on some of these platforms?
Yeah, I mean, I think at the end of the day, as market makers, as we kind of mentioned before, is just you want to label your flow and you want to interact with the flow that you think is most benign, right? And so you kind of want to interact with more retail. You don't want to interact with the HFT hedge funds and the other kind of sophisticated vol traders. Not that to say that everyone can make money. In a bull market, as the market goes up, all the kind of call buyers, everyone makes money. But I think for us, how do we get the highest ROI? And I think a lot of the times, it's interacting more with kind of the retail flow, as opposed to kind of the professionals, right? And so platforms like Open, PowerTrade, and some of these other ones, I think will open the gates a bit for that. I think a big issue for these guys, especially DeFi derivatives products, is can they solve the issue of fully collateralized options, right? I think currently most of them basically require you to, as a market maker, to sell options to be fully collateralized, right? And so can you solve for that issue, because it becomes really capital intensive as a market maker to kind of provide liquidity on these platforms. But that's something that they're figuring out. And we even spoke yesterday to a project that was doing a DeFi structured product platform, right? So they're going to offer all these structured products that we've seen from kind of the centralized players on a DeFi platform. So that was pretty interesting. And something else that we've seen is when you kind of are a market maker and you tie up your collateral as a liquidity provider, right now it kind of just sits there, right? In the traditional world, maybe you get a money market rate, but we've seen like Open and others kind of experiment perhaps with taking that collateral and liquidity mining with it, right? And so if you're a vol seller, you're getting that premium, but you're also getting kind of the yield from from kind of the liquidity pools as well. And so that's kind of like a yield enhancement strategy for vol sellers on these DeFi platforms. So that's some of the more interesting ones that we've seen.
That is pretty interesting. I feel like a lot of what's happening in the DeFi space is folks kind of looking at traditional finance, to Anand's point, maybe in some cases reinventing the wheel, in some cases not, but kind of just mimicking it with a new structure and starting with those first principles. We've been talking a lot about some of the options platforms, but there's others that are looking to do like decentralized credit default swaps and the like. When you look at this market, to what extent is it, folks kind of just trying to get something off the ground versus building something that traders actually want to use? Because a lot of the time, these folks don't maybe have that trading mentality. They're developers and are just, trying to get something off the ground versus building for a potential client base. Maybe Akshai can take that one.
Yeah, I mean, I think that's always the problem, right? I mean, it's half of it's a software engineering problem, the other half is like an actual design problem. And I think actually to, for example, Dan's credit on bit.com, like Dan comes from a trading background, and that's, I think, one of the things that made rolling out onto that platform so easy. I think like with a lot of these DeFi platforms, especially like the kind of original liquidity pools, you saw like implementations that maybe made sense in theory, but not so much. Not so much from the more sophisticated players, unless it was perhaps just like kind of like yield farm. But yeah, I think that's always going to be a problem when designing these things. And I think the only way to really solve it is just make sure you have all the input up front.
Yeah. I want to pivot to this audience question that we have from Mitchell Dong, founder of Pythagoras, a New York and Asia-based crypto hedge fund. He wants to know what the impact of OKX's suspension of withdrawals are on the market. Josh, do you have a perspective on that?
Yeah, I mean, it just like amplifies this crisis of confidence that people have on some of these offshore derivative venues. I think it's affected a lot of our counterparties, right? That are both either kind of like spot market makers, liquidity providers, as well as guys that are doing like the basis trade arb. I think most people are pretty hopeful, right? I think that we've probably seen more people approach us asking for offers on OKX credit, like people want to buy balances and stuff like that, than people looking to liquidate. So I think people who have sort of a balance sheet and some risk tolerance can probably weather this just fine. But I don't know. I'm not like, again, I'm like we're sort of a more Western firm, I guess, if you follow the dichotomy of this panel. I think probably the bit.com folks have a little bit more insight into this, but I haven't seen just much panic at all really around it. Although like you kind of see people now yanking balances pretty quickly off like Wobi and other venues on rumors.
Dan, you want to weigh in?
Yeah, I think first of all, it's interesting that people don't talk a lot about it, given the fact that it's been like 3 weeks. But we have seen quite a few institutional customers. Some of them are pretty decent market makers on OKX. Some of them are active traders there. They're either asking us the same thing as Josh mentioned. They're asking us, can we show a bid to buy their balance out? And also some of them are saying they want to take the money out on the option side, once the OKX reopens, they want to come to trade on bit.com. So it's been, I think in general, we have seen positive feedbacks for the venue, and we haven't seen too pessimistic views about the whole thing. Everybody's like, the money will not be lost, but it's definitely a trouble. So I don't want to deal with it, for another time. So that's the general impression.
So you don't imagine any, cascading negative ramifications on the market?
Yeah, I don't think so. But I do think that really caught a lot of people into the wrong foot right before the rally. So, there are people selling out their positions thinking it's going to be a big problem, a huge exchange going into problems. But, rather the market's been going higher. So.
Hi, can I ask a follow-up question?
Yeah, sure.
So Josh, you mentioned that there's some people offering to buy out positions. What are the offers like?
Yeah, so there's like this kind of like, I don't know, unsanctioned project that's offering liquidity on tokens, and then you can sell those tokens on Uniswap or something. I think those are trading like maybe 80 cents on the dollar. But we've seen like similar ballpark from other folks looking to buy those balances, like call it like at 10 to 20% discount.
And one more thing, do you see any fallout to Huobi? Because obviously there've been rumors about the CEO getting arrested at Huobi, which sounds similar to what happened at OKX. Do you see any like cascading or impact on Huobi now?
Yeah, I think people are just much faster to pull the trigger on getting their funds out. And I think we also kind of saw like on the blockchain, a lot of that fund flow leaving exchanges. I don't have any informed opinion on this, and like I don't really want to speculate as well, just because like all these exchanges are like key partners of I assume like all of our firms, right? I think we all kind of want to see them pull through this as well. So yeah, I haven't heard anything confirmed about that.
We shall see. One of the big questions hanging over the space right now, definitely what's happening over at OKX. So we appreciate that question. Well, I know everyone's got a lot on their plate during these interesting, crazy times, and some of the traders probably need to get back to the screens. So we will conclude. I appreciate everyone for joining, and bit.com and Paradigm for putting all this together. Hopefully we'll be back at it again soon. We can have another conversation in the future.
Thank you, guys. Appreciate it.
Yeah, thanks, everyone.
Yeah, thank you, Frank.
Thank you,
Thank you, everybody.
Yep.
Thank you.
Take
Thank you.
care.
Have a great day.
All right. Bye.
Bye.
Yep.